This is Peggy van der Plage. Today we have a wonderful guest, Sid Paquette, who's the head of RBCx. Hi, Sid. How are you doing?
Hi, Peggy. How are you?
Doing great. It's nice to have you with us. I know you came back from California, so great to see you were able to come back.
It's great to be back, and happy to have you host me on the show. This is great.
Yeah, that's very fun. So let's dig in. So people know you very well from your role as an investor for, I think, many years at OMERS Ventures with the gang, John Ruffalo, Jim Orlando, John McKinley, all the guys, all the J. And now it's been, I think, 2 years, 2.5 years that you're heading RBCx, so more of an entrepreneur. So that would be great, I think, to tell us a bit more about your journey from an investor to an entrepreneur and share the insights maybe you glean, and then we'll go in more details.
Yeah, absolutely. And again, thanks for having me. And I think what I'll start off talking about is just really around, kind of how, like, what was the genesis of what it is that we're creating? And so it's, my path is actually not all that different from what I've spent my career doing, which is, trying to focus in on adding value to tech and innovation companies and the ecosystem. And that's really what, the genesis and kind of why we created RBCx. And so, a lot of this came from my experience with John, Jim, and a host of other folks in terms of, working with some of the leading tech institutions in the country, sitting on the boards of those companies, helping them scale, get to the next level of their business. And then just recognizing how much more could be done, especially with a large financial institution like RBC. And so that's really kind of what started and kicked off this process. And really what the platform is meant to do is it's we're not here to sell banking products and services, even though we do that and we offer all of those things. It's more holistic than that, right? The mandate of the practice is to help tech and innovation companies scale. And there's a number of ways we do that, right? And I think the core of all of the ways that we're going to do that is really around the team. And so we've literally got the best tech bankers in the country, and we've coupled that experience with entrepreneurs, VCs, board members, like people who have been in the tech and ecosystem their entire careers and have actually helped companies scale on the other side. And so there's a lot of things that we do over and above the capital, which, again, to me, the capital is just table stakes, right? Everyone's got the capital piece of it. The part that's really exciting for what we're doing is all the non-capital components, right? So the ability to leverage, I say this a lot, RBC's got 87,000 people on the team. And so that means there's 87,000 unique experiences that we can leverage for the benefit of our clients, right? And so, really this platform is being built to enable us to do that. And we're starting with our team first, they're closest to the clients, et cetera, but we're helping them with everything from getting funding, introducing them to VCs. We're helping VCs get into deals now as well, which is a unique flip. And so we're doing that, again, for the benefit of our clients and helping them grow. And then, we've partnered with third parties. We're bringing them to the table. Again, the view is just, let's figure out ways to help tech and innovation companies. No different than if you and I were having a coffee and we're talking about something and we're friends. I'm just going to try to help you any way I can. That is really how RBCx is operating. It is not, I'm trying to sell you a bank account, or I'm trying to, get you interested in a credit card. I actually don't want anybody focused on that directly. What I want them to do is I want the team to listen to you, listen to kind of, where your struggles are, where we can help, and then go figure out a way to help them. And in a lot of cases, none of that help is ultimately going to realize in any sort of P&L impact to RBCx. And that's okay, because at the end of the day, let's just go help you scale. Good things will come out of that, for both you and us and everyone in between. And so at a high level, that's really what we're doing. And again, we've got a very unique experience, right? Like, we've got people on our team that used to work at Shopify. And I've said this a lot to the teams, and I don't necessarily think this is a great thing from a competitive perspective, but we actually don't compete with other banks for talent anymore, right? What we're competing with are startups and tech companies. And now we all know that's a very, very competitive environment. So again, not necessarily a good thing in terms of attracting the best talent. We got to work hard we do have such a spectacular team that I'm super excited to work with, and they're attracting other A players to the team.
Exactly.
And so that's what's happening, and we're seeing this flywheel start to kick off, and it's really, really exciting.
So I have a question for you, because you gave us the top down. I think people have a better understanding of what RBCx is, and hopefully how they can, interact and benefit from the platform. So a few days ago, I published an article on non-dilutive way for entrepreneurs to get funding. And one thing I realized in my travels, like you, is how much entrepreneurs, but also investors, don't really understand. And when I say an investor, advisor that would be on the board of companies, they don't really understand the services, products that exist in banks that they can use. So right away, if they want money, they're like, okay, I'm going to raise equity, which in some case is the right approach, but in many other cases, it gets extremely expensive if you believe in the growth of your company to use equity to fund everything, operations and things like that. So a few advice maybe to entrepreneur board members on how they could maybe better use their financial institutions, maybe a few products you think people could be interesting, something maybe a bit more precise.
Yeah. So I mean, today, by and large, with venture-backed companies, most venture-backed companies are getting non-dilutive capital, either coincidental to raising an equity round or at some point in their life cycle. So it's actually not that foreign right now to tech and innovation companies to do that, right? And again, whether that's venture debt, it could be everything from, some sort of an operating line, depending on the business model of your company, et cetera. So it's actually really, really common for that to happen. And it's common for that to happen in conjunction with equity, either, like I said, near to the time that you raise or shortly after, you're looking to do exactly what you said, juice the returns, not use equity capital, which is very expensive for a lot of things that you can use debt for. So you're seeing that happen time and time again. I think, again, if I'm talking to entrepreneurs about this, really, there's probably not a lot of education that we have to do on that front, because I think most are pretty good. I think where there's an education is on some of the different products, right? So, sometimes we'll have entrepreneurs who go, yeah, like venture debt, that makes a lot of sense. But they actually don't understand venture debt. And, venture debt, as an example, is you're underwriting to the quality of the investors, which means you have to have investors, right? Yeah. So in a lot of cases, you'll have, great tech companies that have no investors around the table, they're bootstrapped. Venture debt actually doesn't work for them, right? Because there's no investors to underwrite to, right? So you got to just make sure that you line up to what it is you're doing. And again, some business models are harder than others, right? So even on operating lines, I'd say most of the banks, do a pretty good job on the operating line, in a SaaS-based business model. When you get outside of a SaaS-based business model, it becomes a little harder on the margining side. And so those would be some of the things that I would, just on the non-dilutive side, that I would, encourage, boards, CEOs, CFOs, et cetera, to think through. And there's lots of resources out there just to understand and make sure that, they're not wasting their time spending a whole bunch of cycles with a financial institution that ultimately doesn't have a product that lines up really well for their business.
Exactly. And I think it's not the first reflex for an entrepreneur either to ask actually their banks for help. So which, maybe it was making a lot of sense before. I think with your platform, it's a different, you can have probably more advice and more insight. So you've been, obviously, we mentioned that already, an investor for many cycles, and what you're doing at RBC is also, I would say, adjacent to what you are doing. So what I'd love to hear from you is some advice. If you could impart some of your wisdom on, I don't know, fundraising, that's always a big topic, growth, hiring, anything you would like to share with our audience would be amazing.
Yeah, so there's a lot of things there. So maybe I'll start off with, again, and this isn't going to be terribly insightful, but something that I don't think entrepreneurs do enough of. Again, you need to, and especially in a capital flush environment like we've just come through, and we're quite frankly still in a very capital flush environment. Like if you're a good entrepreneur, you've got a good, you got good business economics, and you've got a good story to tell, you have options, right? And what I encourage every entrepreneur to do is you need to vet your venture capital, your potential venture capital investor, as well as they're vetting you. And I would say historically that's not the case, right? Like historically, you go out, you seek term sheets, you look at term sheets, and you get kind of drilled into the terms. You need to do the background on the VCs, right? And it's not talking to CEOs that have been through amazing times with their VCs, because I can tell you those are all going to be very positive references. What you need to do is you need to talk to some where they've been through the battles with them, right? Understand, like, how do those VCs behave? Are they supportive? Are they non-supportive? Like, understand that ecosystem. Like, there's lots of VCs in the country who, they turn boards against management teams. They again, they're just not great partners. They need to do that sort of due diligence, right? And so I encourage every single every single entrepreneur to basically do that diligence on the VC as much as they're doing it on you, because here's the reality, like, you are stuck with them for a very long time in all likelihood, right? And so you need to do the diligence on it. And I think they look for the capital versus, what else am I getting with that capital? Because when you take that capital, there's going to be expectations, there's going to be certain behaviors that are going to be, imparted on you. You need to understand what those are. And like, honestly, like, a lot of VCs, every VC says they add value. I think if you talk to entrepreneurs, it's a subset of those VCs that add value. And so do that diligence, right? And it's not just on the firm either, it's going to be on the partner, right? Because, the individual within a firm, every firm, is going to have different individuals who operate differently. Some are what I call, between board meeting partners, where, you only see them 4 times a year. They show up, maybe they're prepared, maybe they're not. And then they just kind of, spew some advice to you during a board meeting, and then that's it. And then you've got others who are like more integrated into the business. They're more engaged when you want them to be engaged. And maybe that's not what you want, but you just need to evaluate those things, right? So if I had something, it would be that for sure.
And that's a very good point. I mentioned very often, the same thing, vet your VC, but it's a very good point. The second, vet the partner as well, because you can have many partners with different perspective. And to your point, maybe you're happy to have someone who's only coming to a board meeting because you don't want that value and maybe the other way around. So I like your perspective on, to each its own, and you find your spot. And I would kind of twist a bit the question again. So I'm sure you're investing yourself as an angel. You've been, in that ecosystem of investors for a very long time. So for the people like us who are not professional investors as a day job, I would say, an advice that you would mention, maybe it's vetting the entrepreneur. Anything you'd like to share?
Yeah. So you know what? So when I was in California last week, somebody also asked me that question, and again, this is just kind of my secret, and it's not really a secret, but I'll tell you what I do, or what I've always historically done is, so much of the success of any organization is around the people that are ultimately driving that business. And for me, when I meet with you and we're in a pitch and you're pitching me on your business, in my head, what I always do is I always go, okay, well, if I wasn't otherwise employed. So I try to make the bar as reasonably low as possible. It's not that you're going to take me from my business, but if I had options and I was looking for a different role, would I want to go work for Peggy? And if the answer to me is a no, then I absolutely will not do that deal. Because for me, if, again, I've set that bar reasonably low, I'm in market, or I'm at least pretending I'm in market. And if you're not compelling enough for me to go, yeah, like, I would actually want to come work with you to build whatever it is you're building, like, how are you ever going to attract A players in the market after an investment? And the answer is you're likely not, right? And so that's kind of the bar that I set, and that's kind of what I do. So everybody who meets with me, know that that's probably what I'm thinking when we meet. But that's kind of how I think about things, because it's so people dominated in terms of the success or failure of any venture investment. And I've always thought of it that way. And again, I've made mistakes as well, as has everyone else, but it does give me a little bit of that gut check based on experience. And if I'm excited about it, and I'm excited about you, and I'm like, yeah, you know what, I could go work with Peggy and build this, then I get to the next level. It's not to say I'll do the deal, but at least I get through that hurdle and I go, okay, like it's compelling enough and Peggy's compelling enough. I'm now really interested, right? So now let's go through the business and make sure the business makes sense, and the strategy and everything else. But that's one of my kind of first hurdles that I look at when I'm at least initially evaluating someone.
I love that. It's a great filter, actually. Like usually you have that consulting filter that's like, okay, if I'm stuck at an airport, can I spend 2 hours with that person? Well, you're bringing it to the next level. Would I work with you? And we always say team, people is the first thing you need to check. And it's interesting. I never thought about it as, would I work with that guy or that gal? So it's a very, very good test. Well, thank you so much for spending some time with us, Sid, and thank you for not only sharing your insight, sharing a bit more also on RBC. I think it's important people understand what they can benefit from with the platform, because it's quite unique, and I think that would be very, very helpful for the ecosystem. Oh, I have one last question. Are you doing that both in Canada and the US, or are you focusing for Canada right now for RBCx?
Right now we're focused in Canada. Yeah.
Okay. Do you think you're going to expand to the US, or you're at this point focusing on Canada?
You know what? There's a lot to do from a value add perspective in Canada, so that's kind of where we're focused. Yeah.
That makes a lot of sense. Well, thank you so much, Sid, and looking forward to hearing more about everything you're doing with RBCx. I think it's a great initiative.
Thanks, Peggy. This is great. Thanks for having me.
Thank you. Take care. Bye.